All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Yesterday, I got a question. Hey, why aren't we jumping in on the trade war news? It seems like the U.S. is going to do something. And this morning we see some trade war news coming out, and or some trade negotiation war news coming out, and it's a very interesting situation. And in many ways, it really has a Greek debt crisis feel to it in some regards here. And I want to speak to it and speak to kind of the way I'm looking at it here, and some of the possibilities here with it. One thing to keep in mind, and I think it is the most important thing, is what we have gotten from Bloomberg and the Wall Street Journal. Yesterday was the Wall Street Journal, today was Bloomberg. Is not news. It is not anything going on right now. It's not anything that's happening right now. It's all very dated. And it's what has happened over the past while when we really haven't heard much. This was an offer from China to the U.S. to eliminate the trade surplus, to take it from $323 billion down to zero by the year 2024. Okay. And it is a report that the U.S. wasn't exactly thrilled with it. They wanted something sooner. It's one of those where, this happened weeks ago. This was talked about weeks ago. And what bearing and what do you really read into this? Is this something being solved? No, it's not. In the same way as yesterday, right? We got what two U.S. officials, were debating, back and forth between each other. That's what we got from it. Okay, so the bottom line is this is not news. Okay, this is just absolutely not something where you go, oh, okay, something is resolved. Now, why is that important, or why do I bring that up? Because we just had monster volume in S&P futures, 35,000 volume in S&P futures. We haven't had that type of up volume in a long time. We had heavy volume on the upside yesterday. Typically topping volume. Typically volume where I'm wanting to go out and get short. The problem with it is that when we get topping volume, it's typically on news. And the fact of the matter is this is not news. It is not something that is happening right here, right now, taking place right now. This is very much like during the Greek crisis, Euro crisis, where we get news a week after the fact that Angela Merkel met with so-and-so and things were discussed. Nothing happened, nothing new, nothing different, nothing changed. Right, and that's the way it is with the trade war talk. Nothing new has happened. Nothing has changed. So I can't look at this and go, the good news is in. Short it. Let's go down. I can't look at this as, hey, you know what? Markets are absolutely topped, and down we go. Right? If it were news, yes, I could look at it that way. But the reality is, it's not news in the sense that it's something happening right here, right now. And so the rumor, the talk, those tend to continue to drive things higher. And, until we see some evidence of things going lower, I don't think it's very playable. Now, I'm willing to go and short the market today on a very short-term basis if this morning's lows get taken out, just simply because of the volume that we saw on this uptick, right? But let's face it, this uptick on volume was about 4 points, right? Yes, it went higher than that, but overall it ended about 4 points higher, and we're still sitting in that spot. So this whole bump from Bloomberg, right? This whole news bump, or, share the news or share something that was proposed weeks ago, resulted in a 4-point bump for the markets at that moment. Significantly less than yesterday's in terms of the magnitude, but more volume on the minute, right? Much more volume on the minute there. So, still not very shortable, here to me, unless we break out or break down some of these lows, right here that we saw this morning. So, that's kind of my take on it. That's my take on what we see happening here this morning with the, with that news element. And, you'll notice if you take a look at kind of what's moving here on it. Let me pull it up here. Sorry, it may make me log in. There we go. Here we go. But we saw small caps, push up into new highs. Small caps were lagging here this morning in a big way. This news really kind of helped them, and they actually pushed up on a percentage basis a little bit more than the S&P. And we saw the FXI, it also pushed up, but not all that much. This isn't something where the Chinese ETF, has really changed too much. It's about a 10-cent bump here for the Chinese ETF. So, fairly muted in the context of its initial bump here, but pretty darn, big in the context of from yesterday, into today. Ultimately, I am looking at it and going, you know what? Is there a chance to short this? Is there a chance to play this as a top? And I would get very aggressive right now if it were coming in on news, if we saw this action on news. And the bottom line is it's so dated, it's so old, it's so just has nothing to do with right here, right now. The market still doesn't know where trade negotiations stand right now. They still don't know where China is, where the U.S. is, if the gap's been closed, if anyone, there's just no one's been privy here, to that, and nothing about that has changed here this morning. A few things kind of going on outside of this. We had Netflix earnings last night, and they had a revenue miss. And bottom line here for Netflix, I look at the earnings report, I look at everything going on here with it, I look at the competition looking to come in, look at the price change that they're having. I think Netflix is going to have a hard time having a monster gain here in 2019. I think it's going to be a stock that could, go and set a new high. I think that's justifiable as long as the market's healthy. I think it's justifiable to see it go set a new high. And I don't see it breaking into new lows. Okay, this is a report where I look at and I go, this is something with Netflix where I don't think investors are going to be too overly eager, nor, too overly displeased. I don't think it's going to change investor mindset all that much. And I do think the part of Netflix, the story in Netflix that is being ignored is future competition coming into play. But, when you look at that future competition, you do have to, take it with a little bit of grain of salt because, Netflix is absolutely well established in the, in the culture, just in the absolute culture of consumers. And it is something that even if there is competition, more competition that comes into play, chances are people will still have Netflix, right? It's not going to be a one or the other. Hey, I got to buy the competition or I buy Netflix. It'll be okay, I get both, especially with what the pricing is there on them. So, overall for Netflix, I think it's pretty, I think it's one where you don't look at the revenue miss and go, wow, that's a disaster. But it's one where you look at it and you go, okay, a little pullback from these levels. Yeah, makes sense. And you kind of just play it from here from a risk reward standpoint, from an indicator standpoint, without a huge fundamental bias associated to it. Another company, Tesla, announced that they were laying off 7% of their workforce here this morning. Stock's down 9%. I made a comment in the morning note there that I thought, hey, after this sell, Tesla could be a very interesting buy. Now, by after this sell, I don't mean today or this morning. This is something where we're probably talking about this news is enough to take Tesla down into the 280, 270 area, especially as it sparks concerns about competition. It sparks whenever you have a company that's growing and that is just just starting to gain market share. And now they start talking about cost cutting. That tells you something's up. Something's not right. Something's a little and it's enough to put investors in the sell mode for for at least several days, if not weeks, barring some sort of other news catalyst associated with it. So I do think this is a very big negative here for Tesla overall this morning. We also saw this morning, we saw earnings out of Schlumberger, and you can see the stock up 6%. The earnings aren't that good. The earnings aren't great. I mean, they're okay. They're not the type of earnings where you look and go, man, all right, if I read this earnings report, this stock's going to be up 6%. That's not what we're seeing out of Schlumberger this morning. Now, I still haven't gone through the conference call. I've just seen some of the notes here from it. But, this is not an earnings report that is, I don't even think it's Bank of America worthy, even to compare it to something like that. Take a look at the earnings, right? The earnings came in pretty much at Wall Street expectations, right? The revenue, just slight beat, but nothing too major here overall. It's not like it's a huge comparison. I mean, just slightly better than the year prior. It is just not a great report. It just has a lot of hope in it, but not a lot of actual, wow, okay, something is game changed. And I think that's what speaks volumes. The fact that we see this stock up 6% when it's really not that fantastic of a report, that tells you what? We talked about it yesterday, how inexpensive some of these companies are going into earnings. Schlumberger is one of them. Halliburton, very inexpensive going into earnings on Monday. Western Digital, very inexpensive. U.S. Steel, very inexpensive. U.S. Steel actually got some pretty negative news here today, and some estimates slashed based on. I've got to get the wording here for you because this is what kind of sometimes from a trade standpoint. You're trading tickers, you're trading different companies, you're trading different stocks, and then every once in a while you just hear something from an analyst and you go, huh? But Longbow downgrades U.S. Steel to neutral on tubular segment risk. And, I just, okay. They call disappointing feedback from a quarterly oil country tubular goods or OCTG survey. Okay. Basically what they're saying is they're seeing deceleration in demand when it comes to oil, right? And we've talked about how U.S. Steel and oil services stocks, they're highly correlated, highly related here. This is a company, Longbow, that has had a buy rating on U.S. Steel the whole way down. Right, this stock has fallen over 50% while Longbow's had a buy rating, and now they're using a tubular goods survey from oil countries as a reasoning to downgrade the stock. That is just, hey, we've got to get out of this analysis. We've got to get out of this. We've got to get out of this. This analysis that we've had on the stock, this buy rating. and we've got to find any reason why. Okay, here's a reason. Let's go for it. Has nothing to do with valuations, nothing to do with anything but a tubular goods report. Yeah. Bottom line, U.S. Steel holding up pretty well, but this is kind of like Schlumberger. It is going into earnings at just an incredibly cheap level, and so the earnings are not going to have to be all that impressive for it to go higher, for it to really see some strong upside here in earnings. Okay, as I'm talking, we do see the market go set a new short-term high here. Okay, and so just look, if you're looking at this as topping volume, I can't argue that. I look at it as that's a possibility, but in and of itself, the fact that it is not news to me says, hey, the chances of it being a top are significantly diminished, and it is something that has to be kind of taken and go, okay, you know what? The chances of actual news coming out are still very high, and it's one of those where ultimately we will get some news, and that will definitely be helpful. But when you think about the report, even if the U.S. doesn't accept it, right? Let's just say this report, this is the worst case scenario. The bottom line is it means China is going to be buying a lot of U.S. goods. A lot of U.S. goods. Who does that benefit? What companies does that benefit? Right? Who does that really... who does that really help? Nike? Yeah. Absolutely. Absolutely Nike. Western Digital? Oh, you betcha. In a big way. Boeing? Absolutely. Right? Those are some of the big names that, are going to be benefited with China buying more goods here in the U.S. And I think it's one of those where, this news ultimately, I shouldn't use the word news, right? Or this report ultimately kind of signals that China is willing to step in and be a buyer, a net buyer. And if they are, what are they going to be buying, right? Are they going to be buying oil from the U.S. here? Well, very easily could see that. And, that is something that, is kind of been changing here over time. Could the U.S. become a net exporter of oil as we go forward? You look at the administration, you look at what's going on, and that very well, could take place and could happen going forward here. All right. Thanks for hopping on. Have yourselves a great one. We'll talk to you later. Take care.